It's time for Hot Picks. Today we'll be looking at investment opportunities in biopharma stocks, a sector that in 2024 was dominated by the popularity of anti-obesity drugs. We're joined by Evan Seigerman, Managing Director, Biopharma Equity Research with BMO Capital Markets, and he's joining us from New York. Good to see you again, Evan.
Good to see you as well.
Let's start with Eli Lilly. You call this company a leader in anti-obesity. They have an oral version that they're working on. Why don't we kick it off there?
Sure. Let's start off with Lilly. So Lilly is, one of the leaders in the obesity space, obviously also with Novo Nordisk. They had a tougher 3Q print, highlighting some potential demand issues. So we think 4Q is going to be very, very important, especially when they set up expectations for 2025. Why we're still positive. We think the pullback is a buying opportunity for the name, especially ahead of what you had mentioned, an oral version of their GLP-1 drug for obesity. It's called orforglipron. Data is coming mid-year. What this does is makes the GLP-1 product more accessible for patients. It's not a shot, it's a pill that could be preferred by many patients. We also like Lilly because they have drugs outside of obesity, neuroscience, with an Alzheimer's drug, for example, oncology and inflammation.
Okay, moving along to Vertex Pharma. Sorry, had you finished there? I'm sorry, did I interrupt?
No, we're all good.
Okay, all right.
We're good. We're good.
Okay, Vertex, you call best in class, and they're launching an acute pain treatment soon, which you think the market is underestimating, right?
Yeah, so the stock is down 13% today, so I'm glad that I'm able to talk about it. Right now, so this morning we had data from a chronic pain trial. It didn't show exactly the results that we wanted, but that asset isn't dead or that indication. Why we like Vertex into 2025 is because we expect approval of an acute pain, so think post-surgery, non-opioid pain medication in January. This could be a massive opportunity, $2-3 billion. We think that's underappreciated. We see today as a buying opportunity down 13%, given that the fundamentals for the stock are very strong. They are the leader in treatment for cystic fibrosis, which is a rare lung condition. They're the only player out there. They're not impacted by the IRA, and they have no competition. So even with today's pullback, we're still very positive.
Okay, and then another one that you like here is called Disc Medicine. This is a biotech, hematology, and you're hoping to have this treatment, or there anyway, in 2025. What can you tell us about this? This is a smaller one, right?
Smaller one for sure. So we like to round it out with non-obesity, smaller cap names. So there is some risk obviously associated with smaller cap biotech. We like this name. They essentially were the result of a reverse merger in 2022. And next year they could have a drug on the market for a rare hematology condition. We like rare disease, higher priced drugs that are usually reimbursed. They got a good update from the FDA on how to get this drug approved. So we could see approval come next year. They also have drugs to treat anemia associated with rare blood cancers, big market, and also chronic kidney disease. There's really nothing for patients out there who have anemia and are have chronic kidney disease without dialysis. So smaller cap name, but good potential for upside come next year.
So a $1.8 billion market cap. Evan, what would you warn investors about in terms of the risks with a small biotech? A lot of those stories are kind of binary, aren't they?
For sure, they're binary. But remember the fact that they have good, an update and kind of clearance from FDA on how to get this approved. That's a positive. Obviously, data, good or bad, can cause swings, and some of these names may be less liquid. So you have to be careful. But a little exposure here allows you to capture that alpha, especially when you're trying to offset with some of the larger biopharma names, that have been under somewhat pressure.
And just to wrap it up here, Evan, I want to circle back to Lilly, LLY on the New York Stock Exchange. Had such a big 24, but it's actually well off its highs. And I'm just wondering, what are sort of the risks here for Eli Lilly, especially with RFK Jr. coming into his role?
So I'm less concerned about RFK Jr. He's more talk than anything. We actually got a good notice from the FDA today regarding the tirzepatide shortage. That's the generic name for Zepbound and Mounjaro. And we think that, FDA could start cracking down on the compounders come next year. There's about a 90-day period. What was very interesting is a company called Roman Health. They're a private company that does telehealth. They are now an exclusive or a supplier for vials of these products through Lilly Direct. They've also agreed not to sell compounded tirzepatide. So we're seeing a shift away from compounded drug, which is great for Lilly. I think risks 4Q is going to be very important. We want to, the guide that they had, for full year 2024,
right,
high watermark needs to, they need to really achieve that.
Yeah.
And of course, their guidance for 2025 is very important.
Okay, Evan, we'll wrap it up there. Thanks as always.